The macro setup for gold this month has been the most clearest one that I have ever seen in a while, and yet most traders are just watching the charts. Okay, now they are just watching the charts, waiting for a signal. Doji, external range demarker, fair value gap, you name it, that's what they are waiting for. But let me show you what the data is actually showing and what it has been showing since the start of March 2026. Okay, and this is why it matters for your next gold trade, because as you know, the month is not yet over. Now let's start with TradeEasy, and let's start with the actual macro context behind everything that's going on. Okay, what is actually driving gold right now? Now if you go and if you check on this, we will see that currently geopolitical tensions, of course, it's going to be driving gold. CFTC gold net positions decreased, as you can see, and in general gold prices have been down. Now in terms of what exactly has been driving gold, well, we need to understand the current tensions with Iran, Israel, all of that, right? So oil prices, Middle East supply worries, Trump budget cuts, federal rate cuts, the bets going down, federal rate hikes or federal rates remaining steady. Those are the current narratives at play. We can see that is causing Nasdaq to be bearish, but since we're talking about gold, that is causing gold to be bearish. And if we look at the historical data for gold over the past month, okay, we will be able to see something, and what we'll be able to see is that it went from bullish to instantly being bearish, right? Now if you take a look at this, and if we look at exactly what happened with gold right from the beginning of the month up until now, you can see that it went from bullish to then consistently being bearish, right? Now with that being said, right, the reason that I always start here for my macro context is because you know that the environment itself is going to be telling you whether gold is going to go up or whether gold is going to go down. That is like a given. The fundamentals and the macro is always going to be setting the trend, right? Now once you really understand that, the environment is what determines whether you should be looking for a long or a short setup, it is then easy to start looking for these things, right? If you know that the environment is bearish, you can look at bearish POIs. If you know that the environment is bullish, then you can look at bullish POIs, and that is as simple as it gets. Okay, so if the environment is neutral, then you don't look at any setups at all. You know, for instance, something like this, you don't really look at things because it was a choppy environment. Okay, so that is that. All right, now if we come back to actual price, the actual drivers, the actual watch list, the actual sentiment for gold, what can we see? Once it loads, we can see that, okay, in general right now the sentiment is bearish. 70% probability that gold is going to be going down. And if we look at the real yields for the US, you can see that we are mildly hawkish, so meaning yields up, right? So if the yields are up, then what that actually means is that rate cut bets are fading, and then if there is indeed a bearish shock, right? Because now see, the real yields are up, but if there is a bearish shock in terms of poor data, stuff like that, then since we have already priced in higher yields, a bearish shock is going to cause a massive reactions in the markets. Bitcoin is going to crash, Nasdaq is going to crash, and gold, from here onwards, gold will then start pumping up, and it will definitely go to all-time highs. But that is not the case right now. For as long as the Strait of Hormuz tensions remain, and as long as, you know, that is the main key component in which through which the war narrative is around, gold is going to keep on dumping, and you heard it here first. Okay. Now, what's actually important? What has changed the macro context recently? That's the thing. Nothing has changed in the macro context. Gold has been dumping ever since the Strait of Hormuz got involved. Okay. So what this means for gold buyers going forward is that gold is going to remain bearish over here. And if we have some macroeconomic data that comes forth, if the war gets settled, then gold will continue its trend to the upside, because then it's going to be a question of, or it's going to be a problem of actual real world issues like macroeconomic issues rather than anything related to war. Okay, so that is that, and this matters a lot because a change in this driver, being the Strait of Hormuz issues, is going to cause a massive shift in bias. But for as long as the tensions with Iran remain, and as long as the Strait of Hormuz is a problem, Gold is going to be going down like mad. Okay, so most traders, right, they wait for price to break a key level. They wait for price to break a key level before they adjust their view. You know, let me show you an example, right? So people, what they do is, if you go and take a look at gold, okay, people wait for this, right? They will say that, okay, I want price to break here before I consider taking a buy. But if you understand the macro, you will know that if price goes here, there's a good chance you're going to come back all the way down. This is a liquidity grab before we go down, right? And if you understand that the macro has indeed changed, then you find a key level and you can be buying down from here. So this is that key fundamental flaw that people have. They look at the technicals, but if the macro doesn't align with the technicals are not going to be working at all. Okay, the technicals are not going to be working at all. So when you understand the macro, you understand the price move before it even happens. And TradeEasy flags this for you 100% of the time. Okay. Now, when the macro changes, okay, say that price is here. Okay, say that we are here. Okay, and if you went on X on this particular date and you looked at people's gold charts, they said that gold is going to go up, keep on going up. But guys, the macro context is still the same. There has not been any change in the macro context at all. And I sent you guys this yesterday, being the Friday 20th of March. I sent you guys the MD, this M and this D, where this was M and then the remaining was D. So how did I know that this was going to happen? Because I knew the macro context. And if you knew the macro context, then you will know that this is manipulation and the remainder of the day's distribution. And if you watched that previous video of mine, you would have been able to catch this entire sell-off as well. And that, you have no excuse, right? You don't watch it. That's not my problem. I just put things out. If you don't watch it, that's on you, right? And then you see someone else posting the same shit because they copied it from me, and then you go follow them and you go pay them money and you get scammed by them. That's on you. But I'm giving this information for free. Okay, so that is what you need to understand with regards to macro context. Okay, so sentiment itself is telling us how everything has been positioned, how institutional order flow has been positioned. And what we are seeing right now is that gold is bearish, and it has not changed at all over the weekend. Right now it's Saturday, fine, it will change because our analysis is running continuously. This has not been changed. And the likelihood of price going down next week is insanely high. Now, I'm not saying that this is guaranteed, because between now and Monday, fundamentals can change, and then there can be a shock, and that shock is against rate hikes, causing rate cuts, and then gold will gap up, and then it will start trending higher. I do not know. I know that could potentially happen, but right now, since this is live, nothing like that has happened. And if it does happen, then we are prepared. Asian Open, we start buying. But would you know that though? Because you would not know, right? Sometimes we could gap up, right? Sometimes we could have Asian Open, we can gap up, poof, and then suddenly you're thinking to yourself, oh my God, we're going up. Only for that to happen. Fundamentals. This is why macro will always matter. Okay, so now let's try putting the macro and technical analysis together. Okay, if we delete all of this, right, we understand that gold is currently bearish. So we'll take a look at the daily chart, and on the daily chart, what can we see? We can see that this low is going to go 100%. Bro, I'm not even kidding you, man. 100% this low here, this one, is going. Right. So what's the key level below that? The key level below that is this, right? But there's another problem, right? So I have this thing where if you were in one of my boot camps from a long time ago, you would know that model number 3 liquidity, I think you guys know what model number 3 is. Model number 3 liquidity is basically empty price action, right? So this here, that one, the gap, we reacted and we went higher, right? So this low, boom, 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 let me just draw it properly. This low right here Oof, liquidity. So price is going to be trading down here at least 4,265. That is where price is going to go, and then we can seek POIs where we will then expect price to be making a move from here. Okay, that's that first key level POI that I'm looking at when price goes down. That's the first key level key level and POI that I would be looking at to even consider any form of buys. Okay, so now this entire research process, drivers, key drivers, sentiment, dashboard, bias, levels, that is what TradeEasy has been built for. You know that, right? And I've been proving it to you day in, day out if you're on my free public Telegram channel. And people that have paid for TradeEasy have already been flipping their accounts, man. $100 to $1,000 in 2 weeks, that's no easy feat with proper risk management, by the way. Yes, with shit risk management, you can turn it to $1,000, $10,000 if you're lucky. But then with proper risk management, considering losses, break-evens, everything, this guy managed to make $1,000 just by putting $100 and investing into TradeEasy. That is something, if one person can do it, everyone can do it. Okay. Now, I do this every day before the session. I look at TradeEasy, I look at what's going on, I look at the sentiment, I just open, I check it out, and I'm trading. And it's less than a minute, at most 3 minutes if I want to check other stuff, right? So when I was doing it manually, when I used to open Yahoo Finance, I used to open Wall Street Journal, I used to open this, I used to open that. It took me 45 minutes to an hour just to put that data together. And by the time I put it together, the price has already moved, and I try to trade that move, and then it retraces, stops me out, and then at the end of the day, it turned out to be a reversal. So that is why data is very important. Your technical analysis can only get you so far. It'll give you from a month, let's say it'll give you 1 week's worth of winnings, and then the remaining 3 weeks you're losing. Right? And it's not continuous, right? You can win 5-6 days, or 2-3 days in 1 week. Right? Next week you lose, then the third week you win 3 times again, and then the next week you lose again. You end up being break even, or you end up in SL, you end up in loss. And this is not me talking out of my ass. I literally spoke to 2 people yesterday, and they told me this exact same thing. If they give me permission to say their names, I'll say it, but they haven't. So if you want to try TradeEasy, I would recommend that you do, right? This is the most important tool that any trader would actually need. Hedge fund traders use Bloomberg. If technical analysis works, if strategies work, why do they need Bloomberg? Here's the thing. When we do back testing, right? Proper back testing, not the way we do it, no. When we do proper back testing, when hedge fund traders do back testing, they use so many ratios, they use so many variables, some of them called market regimes, right? Market regimes, market regime, market sentiment. Those are variables that they input into their back testing. And that is something I'm giving you in a very indirect manner through the historical feature right here. Where you look at the historical feature, that is your market regime at that particular point, at that particular day. And because you have that market regime and you have that market sentiment on that particular point, on that particular day, for example, like here, on this particular time, right there, this particular time, you had bearish sentiment, bearish market regime, trending market regime, bearish technicals, then you apply your model, it works out perfectly. So this is what hedge fund traders do with their Bloomberg terminal. You are getting it like this, and as I get better, as we get more users, as we are able to do it, I'm going to make sure that everyone has access to that level of execution. And TradeEasy is going to be the platform that everyone will be using to gain an edge. You can trade any strategy you want, I don't care. If you use TradeEasy to trade that strategy, to make sure your strategy has an edge no matter what market condition it is, then the problem is not going to be your strategy. The problem is going to be your mentality, your psychology. Can you weather the losing streaks when it comes? If your stop loss is too tight, you know, those external factors that no one can really stop, then it comes to this. Everything is perfect. You have the data with TradeEasy, you have your trading strategy, and only problem is then you. If you can control yourself, if you can master yourself, trading is no longer going to be a problem for you. Okay. Now, if you want to see this research process every day in real time, whenever I send it on Telegram, public Telegram, free Telegram, the link is down in the description below. subscribe. I'll see you in the next video. Good luck and good trading. Make sure you watch this. Peace. Like and subscribe. Bye bye.